Hi, welcome back to Wealthwise. In today's episode, we are going to be discussing the differences between special funds and money market funds. And the reason why I'm doing this video is because I realized when I did the review for X Special Fund and the Mansa Special Fund, there is some kind of misunderstanding on what a special fund is. And so the purpose of today's video is to help you guys understand the clear differences between a money market fund and a special fund. Now, both of these investment vehicles are collective investment schemes. Both of these investment vehicles are regulated by CMA, the Capital Market Authority, and they are a collective investment trust. They are unit trust. In other words, in both investments, the special fund and the money market fund, in other words, in both Mansa and X funds, and these other MMFs, the regular MMFs, you give the fund manager your money, and then the fund manager invests this money on your behalf collectively, and then apportion the profits or the return on investments to you, right? So what is the differences between the special fund and the money market fund? The main difference is where these funds or where your fund manager will invest these funds. Now, that is what will determine the characteristics of these funds, of the MMF or of the special funds. The MMF, the underlying assets for your money market fund, are treasury bills, mostly deposits in banks and commercial papers, right? So that means that your money market fund are low risk investments. Special funds, on the other hand, is invested in both low risk and high risk assets, right? Now, this is where we have the sovereign bonds, we have the treasury bills, commercial papers, corporate bonds, stocks, shares rather, which you know is high risk, foreign exchange, which you know is high risk, commodities, which is high risk, derivatives, futures contracts, swaps, options, and all that you have, So the underlying assets for MMF is low risk. The underlying assets for your special funds is a mix of low risk and high risk. That is why I told you that the special fund is a moderate risk investment. Now, another difference that we'll see in the MMF and the special funds is the liquidity. MMF are highly liquid. You want your money, you get it immediately. The special funds, they are liquid, yes, when you want your money, your fund manager will give it to you, but they have a lock-in period. The lock-in period for Mansa and X fund, like I told you, is 6 months. Other special fund managers also have their lock-in period. There is no lock-in period for your MMF. You can jump in today and access your money the next day. Another difference between the money market fund and the special fund is in the expected return on investments. Because the underlying assets for the MMF is low risk, we expect the MMF to give us a lower return on investment as opposed to the special funds, which invest in high risk assets, and so we expect them to give us higher returns, even though there's a higher risk element to it. Another difference that we have in the MMF and the special funds is in the objective. The MMF is ideal for people with a low appetite risk, The special fund is ideal for people with a moderate risk appetite. People who appreciate the risk and return element of investment. People who are not quick to panic. People who understand the volatility of the market. People who appreciate the volatility of the foreign exchange trades. People who appreciate the volatility in investment in stocks. So these are people who understand that there's a possibility of losing your capital when you invest in this investment vehicle. When I told you that when you invest in these special funds, you carry along, or you take in the risk of the underlying assets. And these underlying assets are things like shares and foreign exchange and commodities. Those are investments or assets that exposes you to capital loss, to the possibility of losing your capital. Not all of it though, even if not all of it, a portion of it. Those are assets that will expose you to liquidity risk. Those are assets that will expose you to interest rate risk, right? So expecting your capital to be fully secured when you invest in the special fund is a miscalculation. However, your money market fund would offer you protection of your capital, right? So it is critical, again, that before you invest in any of these things that I advise you on or that I share with you, you need to understand the risk element of these different investment vehicles. And that is exactly why before starting this episode of Special Funds, I did a whole video sharing with you and telling you about the different investment risks that you'll expose yourself to when you invest in different investment vehicles. And I holistically covered all the risk areas that you'll actually be exposed to when you invest in an MMF, and I holistically covered all the risk that you'll be exposed to when you invest in a special fund. So as I covered these videos, sometimes I feel like redoing the risk point by point or a little bit repetitive. So another difference that we see in this, the MMF and the special funds, is the purpose. Why are you giving the MMF your money? Or why would you be investing in X Special Fund or Mansa? If you're looking for capital preservation, then the special fund is not ideal for you. The MMF will offer you capital preservation. So the MMF is ideal for you, right? If you're looking for wealth growth, the special fund is ideal for you, not the MMF. Well, the MMF will still give you wealth growth, but not as much as the special funds. Why? Because the special funds invest in high yield assets, which unfortunately also carries with them high risk. Now, something else that you may need to understand in these two investment vehicles, the MMF and the special fund, is the charges. The MMF will charge you management fee on the return that they have made. In other words, your capital is not touched. And that does not mean that you can never lose your capital investment when you invest in an MMF. I had done a video on that as well. I'm going to link it in the description box. Please have a look at it. The special fund, on the other hand, will charge you a management fee. This management fee is charged on your investment amount. That means that it's charged on your return on investment and your capital. One thing that you also need to understand with a special fund is that whatever return on investment is reported is always net of the management fee. So when I told you that the hurdle rate for Mansa is 25%, that 25%, they have already deducted their 5% management fees. So in other words, their target is to give you 30%. When they deduct their 5%, they remain with a net of 25%. When I told you that the objective of X Fund is to give you a return on investment of 20%, that is less their management fee of 6%. In other words, their objective is to make a return on investment of 26%, then they recover their 6% return on management fee and give you 20%. But this hurdle rate and the objective of 20% for OC or the hurdle rate for Mansa is not a guaranteed return on investment, right? So before you give these guys your money, don't say that Berlin told you if you give Mansa your money, you'll receive 25%. No. Don't say that Berlin said that when you give OC fund your money, you'll receive 20% return on investment. No. Those are just their targets. They might hit it or they might fail to hit it. So I thought it's important for you guys to understand the differences between the MMF and the special fund, so that you do not look at the special fund, you don't review or look at Mansa with the eye lens of an MMF. You don't look at the OC special fund, with the lens of an MMF, expecting capital preservation. Of course, we all don't want to lose our monies, but you need to appreciate that there's that risk element. Now, I'm going to link again the review video for Mansa, the review video for OC Special Fund, and the video for the different risks that you'll be exposed to whenever you invest in this investment vehicle, so that at least you can have a holistic understanding of the MMF and of the special funds. All right? Please subscribe and let's meet on the next video.